Being in the investment business for over 20 years, I've come to realize why many of the traditional investment approaches used today have not always produced the long-term results that you desire or expect. One way you've built your net worth is by expecting results of yourself and from the people that work for you. The Porter investment goal is to grow the value of your portfolio annually in up and in down markets. And there's a good reason why this result may not be possible with many investment advisory firms. When I first started in the investment business, I was taught to always tell clients to employ the same broad approach for all their growth investments. That is, to stay fully invested in a diversified portfolio, and if they did this in good times and in bad, they would experience good returns in a long enough time frame. This approach is still used by many investment firms. Prior to the beginning of the last decade, it was really the only choice for individuals of all but the largest, most software-intensive investment firms. But in the last 10 years, we have all witnessed how specialized software has disrupted many industries, providing individuals with services and delivery systems that were unheard of 20 years ago. In the investment industry, more companies can now offer a focused and specialized alternative to the somewhat outdated approach that obligates you to sit through the market's recurring bad periods in order to experience future gains. Porter Investments is following this more progressive path, using our specialized methodology to offer the seasoned investor a more focused, quantitative approach to managing their money. We believe that this allows us to seek strong positive returns every year by protecting significant portions of your prior gains from major market corrections. Is the fully invested, diversified approach dead? No, but given the benefits and results of a quantitative approach, it is certainly appropriate for at least a portion of your assets. A quantitative approach to investing differs from a traditional approach by using mathematical models that concentrate on current market behavior. A market's behavior is determined by a series of daily and monthly market movements. A meaningful change in the market behavior can occur as a result of the changes in the characteristics and the quality of the individual market movements. By quantifying these changes that occur in the market movements over various time periods, quantitative systems attempt to better position a portfolio during periods of dramatic change in the trend of the overall market. Since no system can predict a market top or bottom, quantitative systems use specialized software that react as quickly as appropriate to the data as it occurs. The models we use have historically done a very good job in steering away from periods of significant negative returns and have helped to redefine the individual's obligation to always stay fully invested. In addition, quantitative systems may help alleviate one big regret many investors struggle with when they ask themselves, how much better off would I be if I could at least have held on to my gains when the market went through significant corrections? Because all quantitative models are ultimately designed by humans, and as humans we all have our biases, Porter Investments utilizes multiple independent models in our approach. Our process consists of extensive research on the models that we consider. This includes interviews with the developers to assemble a stable of proven, verified models. We then combine a select group of what we believe to be the best models for a client's designated mix. As you know, the S&P 500 or any other index moves in cycles. The markets experience up periods and down periods over and over. During periods when the market is up strong, almost everybody makes money. We feel the real challenge and the real question to ask yourself is, did you preserve most of your capital or even make money during the down periods? While past performance is not indicative of future returns, Porter Investments has models that have been able to make money during down periods as well as up periods.